The markets are closed, but the business stories are just heating up. Hello, I'm Mai Rodriguez. Catch up with us on Business Brief. Asian shares are mostly higher this Friday, tracking Wall Street's rally to record highs. Markets got a boost from better than expected economic data and a mixed batch of earnings from major U.S. companies. Core inflation in the U.S., which excludes volatile food and energy prices, slowed to 3.3% in June, down from 3.7% in May. But it still sits above the Federal Reserve's 2% target. Japan's Nikkei 225 and South Korea's Kospi are currently in the red, while the rest are in the green. In the currency markets, the U.S. dollar appreciates against the Japanese yen and the South Korean won, but it is flat against the Hong Kong dollar and the Singapore dollar. But the U.S. dollar depreciates against the Thai baht, while the Australian dollar appreciates against the greenback. In commodities, gold prices are down by nearly 0.1%, while oil markets are up. In the cryptocurrency space, Bitcoin is up by more than 1%, while Ethereum gained more than 7%. Okada Manila's gross gaming revenue slumps nearly 20% year-on-year to 7.10 billion pesos in the second quarter. The figure also represents a nearly 10% decline compared to the previous quarter. The downturn comes amid declining tourist arrivals from key source markets. The tourism department reports arrivals from South Korea dropped 18% in the first 4 months of the year, while the number of Chinese visitors plunged to 34.4%. Filipino Americans brace for the effects of President Trump's tariffs on Philippine exports. Our correspondent Don Tagala spoke to some of them, and he filed this report.
Filipino-American business owner Arsenio Alpapara of Oxon Hills, Maryland, is among those who is about to get hit by President Donald Trump's 20% tariff on Philippine imports come August 1st. This former Philippine Constabulary officer turned wholesale importer and distributor brings in about $3 million worth of Philippine-made food and other products every 2 weeks to the U.S., sold to retailers from the East Coast to the West. Before Trump's presidency, Alpapara says his company was only paying 5% import duties. Today, the Trump administration has raised the Philippine tariff to 17%.
The example, this one is Beyond, okay? We import it from the Philippines, okay? Pagdating dito, sisingilin ng custom ito ng 70%. Right? Ayan. So, babayaran namin 70%. So, itong 70% na ito na binabayad namin dito, yung Philippines was not affected. Kasi we are the one who is paying for that 70%.
But in a July 9th letter to Philippine President Ferdinand Marcos Jr., Trump said he is charging the Philippines a 20% tariff on any and all Philippine products sent to the U.S. beginning August 1st. With an annual revenue of about $12 to nearly $13 million, Alpapara says his company should be able to manage to continue his business by paying the required tariff. Operations Manager Ryan Batacan says there is no way the company is absorbing the cost of an unnecessary 20% tariff. They are passing the burden to their retailers, who will then pass it on to the consumers.
So for example, sa Tito Alcanto namin, for retail right now, it retails at $4.99. When tariff takes into effect, magiging around $5 to $6 na siya. So it would a major impact for a common household.
And for chicharon naman?
And for chicharon would be around $5.99, magiging $7.25 na siya. Bottom line is the end consumer ang affected lagi. Because we just passed it on to.
Meanwhile, in this Filipino Kamayan event sponsored by U.S. Representative Grace Meng for her Filipino-American constituents in New York City, the Congresswoman has this to say about Trump's broken campaign promises and Trump's new tariff proposal.
Increasing tariffs, creating a very unpredictable situation for small businesses and consumers is not lowering costs. It is increasing costs. It is increasing fear in the minds of American families. And so we hope that he will, reconsider.
Filipino-American New York Assembly member Stephen Raga is hoping that Philippine President Ferdinand Marcos Jr. will raise the issue of tariffs as well as Trump's proposed tax on remittances in his upcoming meeting with the U.S. President.
Any meeting between elected officials is an opportunity to negotiate, advocate for your country. Any of this 20% tariff situation, I believe that President Marcos has an opportunity to negotiate that for the favor of the Filipino community.
Concerned Fil-Ams in the East Coast are hoping that the Philippine president will be successful in convincing Trump to reconsider the 20% tariff on the Philippines.
White House advisor Peter Navarro asserts that the Trump administration has generated $106 billion in tariff revenue. However, consumers view this differently. For them, it's a $106 billion economic burden that's coming out of the pockets of everyday Americans. Don Tagala, Bilyonaryo News Channel, New York.
The Philippines may see some of its products like electronics, garments, and agri-exports become less competitive once the 20% tariffs on certain exports take effect in August. In an interview on BNC's Business 360, JP Rivera, Senior Research Fellow of the Philippine Institute for Development Studies, warns Philippine exporters could lose contracts or face shifting sourcing decisions from U.S. buyers within 1 to 2 quarters after August 1st. He added that the Philippines, while at par with Vietnam on the 20% tariff rate, is still vulnerable without a strong free trade network and logistics infrastructure. He says President Marcos must push for exemptions and a joint review of the tariffs when he meets with President Trump.
The win here after August 1 can be in the form of, optimistically, can be in the form of finally a reduced tariff. Particularly, we should be able to have some renegotiation, seek exemptions. There will be products that are exempted from this sweeping tariffs. But then the most important here is that the U.S. and the Philippines should be able to renegotiate and restore this relationship that we had for a long period of time.
30 tax evasion cases have been filed against CHG Global Incorporated, formerly World Balance International, and its owners, Barnaby and Bradley Luchong, at the Court of Tax Appeals. This is in connection with the use of fake receipts. A raid was conducted on Brenterprise International, which allegedly sold fake receipts that companies used to evade taxes. Brenterprise is owned by esports executive Bren Chong, who is also part of the World Balance family. The BIR pegs the combined tax liability of the airing firms at nearly 20 billion pesos. The Marcos administration is eyeing major reforms for online gambling operators. The move aims to strengthen oversight and reduce the social impact of gambling addiction. Finance Secretary Ralph Recto says they're proposing new taxes and licensing fees for digital gaming platforms. He adds that the government may also require these companies to go public to improve transparency. If implemented, the reforms would subject online gaming firms to similar levels of public scrutiny as listed companies like Bloomberry Resorts Corporation and DigiPlus Interactive Corporation. Taking a short break, more business stories are up next. You're watching Business Brief. banks and business groups defend the new 20% tax on interest income under CMEPA. They say it simplifies and evens out the system. But critics warn the tax may hurt lower income savers. Sujin Kim has more. Go ahead, Sujin.
Yes, my banks and business groups are breaking their silence on the implementation of a uniform 20% final tax on interest income under the Capital Market Efficiency Promotion Act, or CMEPA, defending the law as a long overdue step toward simplification and tax justice.
So obviously it is a wrong perception. The final tax has always been 20%. All CMEPA did was apply that same rate on the deposits that are over 5 years and on dollar deposits, which I agree with the statements of the government that those were really for the wealthier people.
The 20% final tax has been there since the 1997 tax reform. And that is the 20% final tax on the interest income, not on the deposit itself, on the interest income of savings account. There is no new tax. And the tax is not on the deposit, but on the interest income, and not on the savings account, because there is already been subject to 20% final tax since the 1997 Tax Reform Act. So that's very clear.
The Bankers Association of the Philippines says the law merely removes outdated exemptions that benefited a small segment of depositors. The group stressed that for the vast majority of Filipinos who hold regular savings or short-term time deposits, nothing changed.
I would say that the people who are affected are very few, mostly the wealthy who are affected by this tax. For normal savings deposits, for people who do time deposits, like the ordinary Filipinos, there is no change at all. The CMEPA actually is quite good. It puts a uniform tax across all. It makes execution simpler. It makes investors able to understand the tax regime of this country easier.
So there's really no bad news, except that there are fake news. There were misinformation, a lot of misinformation. So for me, since the international standard is all deposits are subject to tax, then it should have been the case in the Philippines.
Top bank executives described the public uproar as overblown, adding that CMEPA simply ensures everyone, regardless of wealth or currency, is subject to the same tax rules.
Yes. Because large depositors were the people who used to do these 5-year time deposits, or the ones who have dollar FCD accounts. Now they're taxed at the same rate as you and me, who have small deposits, who are always taxed 20%.
The Management Association of the Philippines also clarified there are no new taxes. Meanwhile, Economic Action Reforms, a policy think tank, called the reform sensible, noting that it eliminates an unfair disparity that had allowed the richest 0.4% of depositors to enjoy lower tax rates than everyone else. CMEPA equalizes the tax rate on interest income at 20%, removing the 15% rate on foreign currency deposits and zero rating on long-term time deposits. Data from the Bangko Sentral show that over 99.6% of deposits were already taxed at 20% prior to the law's enactment. But the law has drawn fierce criticism from Ibon Foundation, which argues that flat rates do not necessarily mean fairness. The group warned that while the policy may appear equal, its impact will be regressive, hitting lower-income savers harder in relative terms. Ibon also criticized the law's broader strategy of encouraging Filipinos to invest in capital markets, calling it insensitive, given that 3 in 4 Filipino families had no savings at all by end 2024. The group warns that pushing ordinary Filipinos into stocks, bonds, or mutual funds without addressing low wages, insecure jobs, and lack of financial literacy could lead to greater risk exposure and deeper inequality. While Ibon acknowledges the tax-exempt status of government schemes like SSS, GSIS, and Pag-ibig, it remains wary of private retirement products like the Pera account, which it argues shift retirement responsibilities to individuals instead of the state. And those are latest updates from Pasay City. Back to you, Mai.
Thank you for that report, Sujin Kim. President Bongbong Marcos inaugurates the Bagong Filipinas eGov PH Servicio Hub in San Juan. It's a one-stop shop that will facilitate the delivery of faster, simpler, and more convenient public services to Filipinos. Marcos said this is part of the government's efforts in enhancing public access to government services. Among its key services are the grant of medical financial assistance, free legal counseling and consultation, as well as job matching opportunities, among others.
We have always aspired to actually being able to do a one-stop shop na isang punta lang ay nandyan na lahat. And this is now what we are inaugurating here in San Juan. But as I said, it's not only here in Luzon, Metro Manila. We will also do the same thing for all the local governments around the country. And I think that that is a very, very important development because we are trying to make things easier for our kababayan so that they can go about their business na hindi naman sila nahihirapan at kung ano-ano pangangailangan na nauubos ang oras nila. Sometimes it takes more than to get the normal clearance takes more than 1 day.
Cebu Governor Pam Baricuatro is bent on revitalizing the economy of her province. In a social media post, the governor showed photos with Ayala Mall's president Mariana Zobel de Ayala and her brother Jaime Alfonso Zobel de Ayala, CEO of AC Mobility. Also present was Bank of the Philippine Islands president and CEO TG Limcauco. She also met with Metro Pacific Investments Corporation CFO SkyCable Revilla. MPIC is led by Bilyonaryo Manny Pangilinan. A meeting with San Miguel President and CEO Ramon Ang was also held. During her inauguration speech earlier this month, the governor vowed to prioritize employment opportunities for Cebuanos. We're taking a short break. A look at how Philippine stocks did today coming up next. You're watching Business Brief. Brazil President Luiz Inácio Lula da Silva describes as blackmail threats to Brazilian institutions. Last week, U.S. President Donald Trump threatened Brazil with a 50% tariff rate. This is due to the government's treatment of former President Jair Bolsonaro and alleged unfair trade practices against U.S. firms. Lula warned any attempt to interfere in Brazil's justice system was a serious attack on national sovereignty.
Brazil has always been open to dialogue. We held more than 10 meetings with the U.S. government, and on May 16th we sent them a proposal for negotiation and waited for a response. What we got was unacceptable blackmail in the form of threats to Brazilian institutions and false information about trade between Brazil and the United States.
Former U.S. President Barack Obama and his wife Michelle dispel divorce rumors. This after Obama attended 2 public events without his wife. They appeared on a podcast hosted by the former First Lady and her brother, former basketball coach Craig Robinson.
These are the kinds of things that I just miss, right? So I don't even know this stuff's going on.
Right.
And then somebody will mention it to me and I'm all like, what are you talking about?
There hasn't been one moment in our marriage where I thought about quitting my man. And we've had some really hard times, so we have had a lot of fun times, a lot of adventures, and I have become a better person because of the man I'm married to.
The Obamas married in 1992 and have 2 daughters, Sasha and Malia. Tensions are rising in Desmarinas Village ahead of a special election over a controversial 330 million peso community center. 2 slates are facing off. The progressive group, led by Dr. Benny Herbosa, wants to push through with the project, saying all permits and designs are ready. Opposing them is the A-Team, led by former NEDA chief Winnie Monson. They're calling for a pause to revisit the design and rebid the project. 3 independents are also running, A candidates forum is set for July 19 with voting on July 26. Philippine shares snap its 3-day losing streak after closing the final trading day of the week in positive territory. The PSE index ended higher by 0.1% to close at 63.03, finishing the day as the 11th best performer in Asia. The sectoral indices ended mixed, with financials rising the most at more than 1%. Holding firms fell the most at nearly 0.7%. Decliners outpaced advancers at 104 to 93. Total value turnover reached 8.4 billion pesos. Week on week, the PSEI fell by more than 2%. More than half of the day's most active stocks ended in the green, with DigiPlus rising the most at more than 15%. Meanwhile, the foreign exchange market, the peso, currently trading at 57.17 against the greenback, appreciating from the previous close of 57.29. That's a wrap for today's Business Brief. I'm Mai Rodriguez. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. See you then.